Hey everyone, it is Evan here from The Trade Risk on Friday, October 5th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So we finally got that uptick in volatility this week. We saw a 25, almost 30% pop in the VIX. We saw some selling pressure expand out, not just isolated to small caps. So there's lots to talk about. Some of those levels that we've been mapping out for the past many weeks that really never mattered because the market just continued to grind higher. They're starting to get a little more important, and we can finally reference some of these longer term levels. So let's jump into the action here with the S&P 500. This is the weekly time frame. Each bar represents 1 week worth of trading. We can see here as performance wise, we finished lower, almost 1% this week. It was minus 0.9%. And if we zoom in just a little bit here, we look at this week's candle. First thing we'll notice is that we resolved last week's inside week. Remember, last week we were contained within the prior week's range. We were below the highs and above the lows from the week of the 21st of September. We had that quiet inside week yesterday or last week, and we talked about that, looking for some expansion in volatility. Well, we did get that as we broke down to the downside. Volatility came lower this time, and we came down and tested this very important 2872 level that we've been talking about for really months on end at this point. Now, the importance of 2872 again dials back to the highs made back in the start of this year in January. That is where the market topped out. We saw that very quick 10-15% or so correction. Don't even remember what that was at this point. Let's see what it was. Yeah, it was about 10% correction off of those January highs, and then we kind of took the rest of the year to grind up and finally get above it recently. Now, the reason it's so significant is because as we broke out from this level to new highs, new all-time highs in August, we now have had 5 or 6 weeks. We checked back to support once or twice. We've had 5, 6, 7 weeks of buying now. 6 weeks of buying here above the prior highs here. So for everybody that loaded up the boat here or is looking to get long as the market started to take out the prior all-time highs, look for this uptrend to continue, these 6 weeks worth of buyers are now going to be under some stress right now if this market takes down and breaks down through this 2872 level. It does not have to happen by any means. We tested it and bounced here on Friday, but that is going to be the big level to pay attention to. Below 2872, we have a nice air pocket all the way down to 2800. That's the next big reference point, nice round number to reference if we start to break down through that level, and that is what we're going to want to pay attention to. So for the intermediate term, we are still holding up here, but the market's certainly being tested right now. We get a little bit of stress right now for the bulls, and we're going to want to see, can this 2872 level hold? We do have some trend lines here that can coincide with. If you want to draw sort of your trend line from April all the way up, you can see that comes in right around this level too. So we have this kind of slope that we've been grinding higher here. We get this horizontal level. That's what we're going to be wanting to watch as we start into trading next week. If we go down to a daily chart, we can see this a little bit clearer. We did get, of course, this nice reaction here on Friday off of testing this 2872 level. I believe, I don't have the 50-day SMA on this chart, but I believe it comes in right around that level too. I don't personally pay too much attention to it. I know lots of people do. Certainly nothing wrong with it. So yes, it looks like the 50 SMA was tested, undercut briefly today, and then reclaimed. So that's another level where I think a lot of technicians will be paying attention to. And again, it just really goes to show you sort of the confluence and importance around this area. It was the lows here from September as well. So that is going to be certainly the near-term level to pay attention to. And again, I do think we have a pretty quick air pocket all the way down to 2800. Doesn't necessarily have to get there in a straight line, but I think, again, if we start to lose this level, then it certainly opens us up to more downside risk. On the upside, if we want to turn this back around, if we want to flip this and make everything right again, I would want to see this market back above 2815 or so. If we can start to get back above the August high here, back into this old range, I'm not sure that we would reclaim this slope that we were working with for a few weeks, but getting back above 2915 or so, that would at least, pause the damage and at least move us sideways. And I think that could be a very reasonable thing that the market really does at this point. Doesn't necessarily have to just beeline higher. Some consolidation up here, just quiet down. Let's see support rotation kind of come through this market. And if we can do it all above 2872, that is certainly in the bull's best interest. So that is really the technical levels I'm paying attention to there on the S&P 500. Let's look at the Russell 2000. So the Russell is really, proved to be the canary here that really kind of tipped its hand before the rest of the market saw any pressure. Remember, the Russell 2000 started to lose this 170 area. We talked about this many weeks back, but essentially saying, look, this is a good short-term line in the sand. If we start closing below 169.60, 169.50 or so, essentially the highs here from June, July, and early August, that is a near-term sort of cautionary event. Doesn't have to be a doomsday event. Certainly didn't know it would turn into this, but it was at least a framework to use to either get defensive or at least just pay attention to your risk or whatever it means for your strategy and time frame. So as we started to lose that, this has continued to accelerate. This was the biggest down performer here for the major averages this week, almost 4% to the downside. And when we look here at this weekly time frame, I know there's a lot of lines drawn on here, but really what I want to show you is this channel that extends from the 2016 lows here. This has been sort of the capitulation points of where the market has sold off to many times going back the past 2.5 years or so. And you can see we essentially tested this longer term level just here on Friday. Not quite, and of course it depends on how you draw this. I'm not looking for things to be precise, but generally speaking, that general kind of slope up here was tested. I think if we go down to the daily chart, you can see it come in right around this 160 level, so maybe a little bit more to go, but you get this nice horizontal level here. This was the highs from the year in the IWM. That was nearly tested here as well, so a little bit of a nice kind of washout today. I have no idea if this is the end of it. We've certainly moved to the downside pretty quick. We are stretched in the short term, maybe a little reversion here. I think for you active traders, this is going to be a great environment for you. You're going to have a little more volatility, a little more range to work with. So I think for you day traders, you shorter term traders, probably going to be, in a good spot here over the next couple of days as we get some of these ranges increased. Maybe get a bounce up here. Does that turn into a lower high? Those are the types of things that we need to be asking ourselves and prepping for. So for the Russell 160, that's going to be the big level that I would be watching here to hold, to contain this market on the downside. And if we do get that bounce higher, well, let's see how much, how high do we go, and can we stabilize and hold up and not just roll right back over. So that is the Russell 2000, and finally the Nasdaq 100, which also suffered second worst here, 3% to the downside this week. And when we look here at the weekly chart for the Nasdaq 100, you can see we printed a bearish engulfing week. So that means we opened up above the prior, not only the prior week's highs, but we in fact opened up and engulfed, let's see, almost engulfed, you almost really engulfed 5 weeks worth of trading here with this week's session. I don't really count this. I generally like to look at the wicks, although doesn't really matter to me. Whatever you want to use as your definition of an engulfing bar, I tend to like, the wicks and everything. So at least the past 4 weeks, we just engulfed to the downside. So that means we opened up above the entire range of the past 4 weeks. We sold off, went red, and closed below the lows from the past 4 weeks. So certainly a bearish signal, and it came on heavy volume. So follow through, of course, is going to be key. We have this in the context of an uptrend. So you have, again, some conflicting signals here. We've been in this nice uptrend. The uptrend doesn't necessarily have to be over, but you're getting some shaky signs. If we go down to that daily chart, when I look at this price action here, again, it certainly doesn't look too encouraging here in the short term, but for the Qs, I'd say, the lows from this week and right in here around this 178 or so area, if we start to get follow through from this bearish engulfing bar and we start losing all of this previous supply in here from the past month or two, then we're going to have an issue where we have a lot of buyers up here that are now underwater, that are going to be feeling some pain, that are going to want to sell, and that's what leads to tops stops. And again, it doesn't necessarily have to happen like that. We can certainly stabilize here, but if we started to get some quick follow through on equally as high volume like we saw on Thursday and Friday, that would be a concern for this market and the way I would view it. So for me, the lows from Friday again are going to be a key reference point. When we zoom back out here, 170 is going to be the next big area to the downside. That's 10 points below where we currently trade, approximately 5%. If we start to lose these lows, I think it's a possible target to have in mind. So that, I think, covers really the brunt of the major markets, although I do think it is worth noting here for the Dow Jones, it closed flat this week, down 8 cents if you're looking at the diamonds. For the DIA ETF, it is still above its trend line here that extends from the July lows. I know some people don't, look at kind of sort of dismiss the importance of this major average altogether. I'll let you be the decider of that, but it is interesting to note that there was at least some huddled up strength and some relative performers in the Dow Jones, in some of these industrials, some of these slower names. So it's something worth at least paying attention to if you do want that exposure. If you are looking for some of those relative strength plays, certainly take a look at the Dow and some of those related sectors. So that I think covers everything I want to talk about. Let's go to some of the major markets here. We'll start with TLT. So this was certainly the front and center story this week. Rates generally right across the curve, really accelerating to the upside here. TLT is the long bond, so as rates go higher, you're going to see bond prices go down. We talked about this on Tuesday. In fact, Tuesday's session was all the way back here. What a world of difference 4 trading days can make. But we talked about TLT right here in Tuesday's video. Said, look, this is at a high stakes area. We could be looking at this either direction. If we're looking for some type of reversion here back into this range, if support can hold, great, that's a possible trade. Otherwise, if we start to take out the lows here for Monday, it's a breakdown of a very significant area, and in either case it could be played as a potential opportunity. We were fortunate enough to play this to the downside, getting short TLT right at the open here on Wednesday, actually playing it via TBT, so this is the 2x inverse ETF to the TLT, but essentially getting long TBT right here at the open on Wednesday, and we ended up selling half of this trade on Friday here into strength, trailing up a stop. Not looking, simply a trade, not looking to be a hero or make some bold stance on the economy or tightening or how long this can all last. This is simply just a momentum trade for us. So, we do have a horse in this race now at this point, but again, it's simply a trade that has a trailed stop, and we'll look to continue to manage that at this point. When we look here at volume, we know things are very extended now to the downside, so we know that we could see a snapback here at some point. Wouldn't be too surprising, but structurally, when we look here at, say, even a weekly time frame of TLT, and we go back even 4 or 5 years, you can see this has been an important level going all the way back to, in fact, even 2012 or so. Yeah, we had some significance around this 117 level, and you can see we finally broke down very heavy volume. I think the heaviest volume going back to 2011. So a very, important area that was lost here. Short term, again, oversold to the downside. Don't recommend necessarily jumping in on Monday, but it is certainly, at a point, or was at a point, to take notice, and sellers are in control here. So that is TLT. USO is did finish higher on the week. Let's see, 1.1% to the upside, but it certainly gave up the highs here. I think, really though, it's still in a very healthy state, pulling back now to this trend line even that is, that started this recent rally here in early September. That's encouraging to see, a little overbought here, looking at a weekly time frame, but it's holding above all these significant areas in here. If we dial back even further, there is some prior supply in here from 2015 or so. If we're looking at simply the USO ETF, you'd want to look at the futures contract though for a little more accuracy on that long-term levels, but at least in the short term, USO bulls continuing to hold it down. Natural gas, same thing. This did close to the upside this week, 5%, so a nice, really quick rally here in natural gas. Over the past 3 weeks, it's moved about 15 or so percent 20% at the highs of this week. Again, a little bit of a check back here, I think is good. Even a little bit deeper, I think would be fine. And you know, just to get those higher lows get put in, and not to just continue to blow off necessarily to the upside. But good volume coming in, short term, intermediate term here, bulls very much in control. Finally, if we go to metals, and see gold really didn't do a whole lot this week. I mean, it certainly did close higher, so a little bit of maybe a flight to safety there. Uptick in volume, back up towards the top end of this range. Really, you know, stabilizing. It's doing everything that certainly we've been wanting it to do to get this back in play. Is you know, either a bottom or some type of at least even short-term bottom. Silver, kind of the same thing here this week. Was about flat on the week, but still holding up towards the top end, or you know, eking up above the top end of this recent multi-week range. So a little stabilization there in the metals, good to see. And you know, no big explosive move out of gold, but it looks fairly pent up here. Looks like it could start to get going next week. If it can start to rally above this 114.50 area, then I think that could maybe spark a little bit of a move there, and that's something to pay attention to. A nice little trade idea for next week. So that is gold, that is silver. I think that's everything I wanted to cover. So let's go now to the sectors on the week. We'll look at the top three and bottom three for this week. And we look at the top three, we got energy. So energy here, 1.87%. Nice relative performance here in the energy space. We did see oil up. We saw natural gas up, of course. It is back up to, the XLE is back up to these recent highs here that it made back in June, July. Still range bound, still moving sideways here, but nice to see it back up here. MACD back in positive territory. I wouldn't, you know, necessarily want to see this just go off to the races here next week. I'd love to see it just kind of bump up against these highs here around 78.25 or so, move sideways, and then break out. I think that'd be a good, you know, actionable, you know, possible opportunity there. But if it wants to go, it does certainly, you know, can go, and that's something to pay attention to. But XLE, nice relative performance. Utilities, number 2 here this week. That makes sense, right? Nice safety, you know, safety play here, and XLU certainly getting back up, holding and recovering from this $52 area. If we go to a weekly chart, maybe this is some type of higher low that just got put in here, this washout underneath $52. Either way, encouraging to see. Doesn't look so actionable to me. Generally don't play too much in the XLU space in either way, in either case. And financials, number 3, which was interesting to see. This recently had this horrendous looking week last week, 4% to the downside, really taking out all these cluster of lows. And now you can see we're trying to recover a little bit. I'd still be a little bit cautious here. I know that banks, you know, with the different, you know, if we do start to see this uptick in rates continue, could potentially, you know, boost those profits there for banks as they lend out. But, you know, I still would want to see price action, you know, rule everything here. And for me, I would at this point want to see us back above $28.75, $29 or so. If we can start to take out last week's highs, that would make me a believer. Otherwise, I'd be a little bit cautious here, as that's still a little range bound to me. On the downside, we had biotech, which got slammed this week, 4.44% to the downside. This is the IBB. It's the big ETF here, larger cap names. It is back to support, though. It is back to multi-month support, multi-week support around this 115 area. So kind of like we talked about in the SPY, the Qs, IWM, the lows from Friday I think are going to be important to hold here if we start, excuse me, to quickly and you know, with just as much volume start to take out these lows excuse me, from Friday, then that is going to be an issue there as we get a potential topping pattern. But again, I'm not saying that has to happen, just something to keep an eye on. XLY, discretionary ETF here, seeing some selling. This had been holding up pretty well here, very steep uptrend. Now you're seeing it snap, and take a look here how tight and wound up this XLY was. We talked about that a couple of times, but probably didn't make it as clear to notice this tightening of range here. So hopefully someone picked up on it. But we get this very just clean technical break here, very tight price action, steep uptrend. And with that comes expansion volatility to downside. Look at the volume that comes in today. Just real picture perfect breakdown for XLY. And finally, XLK looking like the Qs, bearish engulfing bar here over the past couple of weeks of trading, losing potentially, in fact it did, lose the trend line that extends from the June lows here. So very much like the Qs, kind of similar analysis. If this gets followed through to the downside here, then you know, certainly expect more pain here for XLK bulls. So that is, I need some water, excuse me. That is the recap for this week, and hopefully you guys managed it. Hopefully you weren't taken too off guard from the uptick in volatility here, and if you were, that's okay. Go back to the drawing board, look at your plan, you know, tighten up your process, make sure this doesn't happen again. It's fine to make mistakes, but as long as we catch them, improve upon them, and don't make the same mistakes twice or maybe 3 times, then you know, you're doing pretty good. So that is it for me. Thanks so much as always for watching. If you do like the video, subscribe on our YouTube channel, and I will see you in the next video update. Thanks so much.